And welcome to the latest episode of Hung Chin Hon Sweatin Money. I'm your host. Well, before I get to introduce myself, I should give the mandatory disclaimer. We may or may not have ownership or the positions in the stocks mentioned on this show. Don't buy stocks based solely off of what you hear from this podcast, and always do your own homework and research before investing in stocks. So, I'm your host, Kong, along with my co-host, Gibson. And now let's take a look at what's in the news. The Icelandic Prime Minister Sigmundur Davíð Gunnlaugsson, I'm pretty sure I butchered that, was the first public official to resign over the Panama Papers, revealing hidden money hidden in the British Virgin Islands. Now, Spain's José Manuel Soria has resigned his position as Minister of Industry, Energy and Tourism after it was revealed that he has assets in these places as well. No thoughts or comments?
I don't quite understand how it would really affect the giant scheme of things, at least not from an investing standpoint. Perhaps maybe the resignation of people in power might leave a gap and then there's a void to be filled, but really politicians are a dime a dozen, so.
Well, I mean, Iceland doesn't have much of a economic impact on us, but Spain is a major manufacturing house in the Eurozone. So the fact that this minister would actually have to resign it's going to make things interesting. I'm not sure how big of an impact it would have, but we'll see.
Yeah, I mean, if anything, it's like a wealthy individual been charged with tax evasion, unless that, yeah, I don't know. I mean, it's a little bit different. It was like king of Spain is now executed, or king of Spain has now resigned. I'm like, yeah, sure, but if you're a politician, they just reelect someone, kind of like Nixon, if someone gets impeached, you just replace them.
Okay, well, for you foreign exchange traders out there, Jim Rogers of Rogers Holdings didn't specify what specific factors will trigger the recession, but he says that when it happens, the Japanese yen will fall, and if that is the case, the US dollar will rise.
Okay. So hold on to cash? Is that essentially what he's saying?
That's
or short every other currency? Or is he saying short yen?
Yeah, he's saying both, actually.
Yeah, short everything but US dollar.
Well, the yen specifically because of the way it's been rising over the past couple months. But anywho, so Nike released their quarterly earnings on March 23rd, and they actually did pretty good, thanks to sales in China. So despite the worries about China's economy slowing down, Nike has outdone themselves. Now, can other American brands do the same? Does this mean that China's economy, even though it is slowing, might not be cooling as fast as most analysts think?
Well, I don't know. I mean, China, GDP being lower is not necessarily a bad thing for the United States, for China. And depends on why is it becoming lower? Is it because, yeah, it's mainly why it's becoming lower. I mean, yeah, that's roughly it. So it was due to the trade imbalance, and is it due to China buying more stuff from us, and that's why the GDP lower? It's actually a good thing for the United States. But if it's lower because they're producing less and they're exporting less, they're exporting less, they're producing less, they're exporting less, they're buying less altogether, that's what we were afraid of. we're afraid that China will not import as much, and as long as they continue to import, and the import rate from them keeps growing, we really have no concerns.
Well, as we talked about last week, when we looked at the PMI numbers that were just released, I mean, they're lower than what they were like last year, but as a whole, they are coming back up. Oh,
They are what?
shoot. Hello?
Yeah.
Yeah, they're coming back up. The PMI, that is.
I see.
Yeah. So usually, if the PMI is going up, and especially if it's above 50, which it's barely above 50 right now, that means that there is a positive sign of expansion. So.
Well, sounds like good news.
Okay. So, let's see, move along. Oil to top $50 a barrel, according to some analysts, from its current level of $41 a barrel. This, of course, is dependent on whether or not OPEC and Russia can come to terms with the production cap. Mainly what they're trying to do is jockey for positions to meet the PRC's demands.
What's the PRC demand? Just the consumption demand?
Yeah, just consumption demand.
I see.
I mean, there's nothing specific as far as like what it's going to be used for. If it's mainly consumer consumption with like heating, I don't know, whatever. I mean, it shouldn't be heating. I mean, we're coming into spring and we're going to go into
I
summer.
think all this comes in the factor of, like concerns with global climate change. Now, in a way, global climate change can drive down the demand drastically, but it might also give like the world powers a reason to regulate the amount of oil that is being released, which may or may not be a good or bad thing for the market.
Yeah. Well, the thing is, however, is that today the Saudis led OPEC with several countries along with other non-OPEC countries like Russia to meet in Doha, Qatar. These countries came together to talk about a production freeze to keep prices closer to $40 to $45 a barrel. Sorry. Sorry about that. So the thing is that Iran, however, did not send their oil minister, which means decisions will still be limited. Plus, they've already stated that they would not freeze their own production. Note, however, there isn't a system to punish those who break away from the agreement if it is actually reached. So.
Tragedy of the commons. Game Theory 101.
Yeah.
Let's see how it plays out.
Now, many, due to the performance of the major stock indexes and oil's performance, many analysts are now linking oil's prices to the performance of the overall stock market. So Investopedia took a look at assets that, despite the recent ups and downs, have actually surged. According to BlackRock, high-yield municipal funds gained a slight 4.09%, while high-yield muni tobacco sector funds had gained 15.75% compared to high-yield bonds and high-yield energy sector funds. So, good hedge.
Definitely sounds like good places right now. Yeah. Place your money.
All right. On a side note, the U.S. is considering allowing the victims of the 9/11 attacks to sue people involved with the planning and execution, which may include some Saudi royals who have been implicated. In response, Saudi officials told the president that if this is going to be the case, the Saudis would sell off a huge amount of U.S. equities. As such, it's rumored that the president himself is urging Congress not to pass the bill. No thoughts?
Does that mean we're gonna now bomb Saudi Arabia, take over, and then collect the debt? Because it sounds like they owe us a lot of money, you see. I mean, the value of a single American life is probably like $1 trillion. Just saying.
Well, considering how much we've already spent in the Middle East, it's probably, about $2 billion actually.
Yeah, so I think they owe us like, a few million trillions and we'll call it even. Such a fair deal. They're gonna love it.
Yeah, sounds like it.
They're gonna they're, they're gonna love it so much. They're gonna just be tired of loving that fairness of their deal.
It's gonna be huge.
It's gonna be huge. It's gonna be so much winning. They're just gonna love it. They're just gonna give us their oil and land, and then help us build walls. It'll be great.
Exactly. Let's see here. Now,
Can you imagine what it'd be like if you could ever sue anyone that's involved in any type of crime? Like
well,
just remotely related. Like since these convicts got out of prison, and the government allowed them, and they committed another crime, then we could sue the government for being involved in basically a future crime.
well, no, technically you can't sue the government. You can only sue like the person involved with that crime for.
So who exactly are they suing for the crimes against the 9/11, the World Trade Center?
People behind the execution and planning, and also the funding of 9/11.
Have we seized their assets?
No, we haven't. But we have to bring things to the court first before we can actually. I don't know if I came through or if I cut off there. We have to bring it through the courts and then convict them first before we can actually freeze their assets. We can't just outright freeze it without any justification.
I guess so. I'm sure there's a clause in a Patriot Act somewhere.
Yeah, probably. But oh well. Now, ever since the bank bailouts of 2008, people were all up in arms using the over people using taxpayer dollars to bail out the banks. Well, however, since then, there have been various attempts at quelling this sort of anger by creating mandates that the banks had to have plans in place to declare bankruptcy without using taxpayer money. A report on Wednesday, April 13th, said that 5 of the 8 banks failed at this. These banks include Bank of America, State Street Corp, Wells Fargo, Bank of New York Mellon, and J.P. Morgan.
Time to break them up.
Yeah, but do you think that's really going to happen?
Yep. I think it's the question of whether or not banks should be regulated, and I think the answer is yes. And I think like a utility, let's say this, like suddenly these water companies decide to cut off all water. So you know what? It doesn't make sense that something that's required for life is cheaper than gas, right? It's like without gasoline, you still live. Without water, you die. How come we charge so little for water? We need to make a profit, right? Blah and blah. If they suddenly became deregulated, that will probably happen. So that's the reason why that we need to regulate it. And yeah, I think banks, because they're so critical to monetary policy and regulation in the economy, probably should undergo regulation as well. And if these banks can't be regulated and they cannot ensure that they won't like try to become too big to fail, then they need to be restructured one way or another. We only need banks that can play by the rules and basically not fuck up our economy again in play. We don't need banks that cannot do that.
I do agree with breaking up the banks. Oh shoot! Well, I do agree with breaking up the banks, but not for the same reasons that you are talking about, because there is some legitimate concern as to the resources and how much we charge them.
Sorry, you're fading it out. You say there's concerns of what?
So there's a matter of the resources and how much we charge people for that, because to a certain extent, yes, while the companies want to try to make their profit, we don't want to let them gouge us necessarily, but at the same time, there is a finite number of resources, right?
Well,
So,
there's
I mean,
there's
there's
the
certain
counter
things we can
argument on
obviously
that
do.
is basically economies of scale. Like
Explain.
like so let's say Bank of America develops a mobile app and they develop a mobile app for Bank America, and they basically have like 100,000 branches or something. They don't have that many, probably not. They probably don't have that many, but let's say they have 100,000 branches. That cost of the mobile app is now split across all those 100,000 branches. Versus if you are a small bank and you basically develop that app, yet that cost is now only allocated to one branch. So you have to increase the fees to make up the difference.
Right, I understand that point. I mean, that what you're describing is pretty much breaking up a monopoly. And I understand how oh, fuck. They control the the resources,
Yeah.
but to a certain extent, um, like let's say with China, for instance, right?
Hmm.
Um, because they price resources like water so low. Oh, jeez. Because they price water so low, people they don't save water. They use too much of it, and then it leads to excessive use of water, which then of course leads to issues like droughts and other things. So,
That's true.
so I mean that's something else to consider.
Well, I mean, like, I think the issue is that people with power have a tendency to abuse it, and when you have power over life itself, might have a tendency to abuse it, and that's basically why the government needs to step in, or else, I feel like war has always been fought over resources, and if someday someone's like, hey, you know what, you can't have water, someone's probably gonna throw a fit, start some crap to secure the things you need for life. And to prevent such things from happening, the government's like, you know what, we'll regulate this. We'll make sure that everyone has more water than they need. And of course, there might be a time where the drought would be so severe that not everyone will be able to get the water they need, and it might be due to abuse, like people just, you know, not being thrifty enough with the water. And yeah, at that point, maybe government will allow the companies to increase the prices to reflect the scarcity. But I think some oversight with the companies are also required to ensure that they're not artificially manipulating supply.
I don't think this is really a matter of supply. Oh, Jesus Christ, man, this fucking wireless here. Um. Anyways, so the um, the issue with breaking up the banks isn't about necessarily monopolies. It's about whether or not the U.S. can afford to support a lot of these banks, these big banks that are supposedly too big to fail, to then be bailed out by the U.S. taxpayers.
It's not bailing out per se. It's
Bailing
it's
out.
the whole point is that the taxpayer will bear the burden one way or another. Like there's a social cost to the banks failing, and it's any person who just judges strictly based on financials is extremely short-sighted. Like it's basically 1/1000, like 1/10,000 or 100,000th of the total cost, like of all the impact there is. For example, the bank's failing, then basically there's less lenders. The interest cost goes up. The liquidity impacts a lot of corporations, and then they don't have the operating funds to function to operate, because not every single corporation has 100% of the capital they require to operate at all times. So they get screwed. And there's a complete giant chain of impact. And the cost you can easily see it nowadays is the impact of the monetary policy versus the austerity measures that were implemented. That's essentially the total cost that we'll have. Not only that, but then the United States will fall as the economic superpower. So like in that big scheme of things, the trillions we spent bailing out the banks is like a drop in the bucket compared to how much we would have lost if we didn't bail them out. Now that's the decision that Bernanke implemented. There was no choice. I mean, it was a very, very safe bet to bet that the banks will be bailed out at that point. Now it's basically the measures that brought in, like, that allowed the financial crisis to bubble into what it was then, was basically Alan Greenspan concluding, and he admitted this before Congress, is that banks would preserve themselves. They wouldn't do anything negative. They wouldn't do anything that would cause them to be like their corporation's livelihood to be jeopardized. Well, he didn't factor in the fact that monetary there's in terms of economic regulations, there's fiscal policy and there's monetary policy, and banks play a very critical role. If not, they're at the heart of the monetary policy regulations. And between fiscal policy and monetary policy is so much cheaper to implement than fiscal policy. Is so many. I think it's like at least 10 folds more effective than fiscal policy. It's a rule of thumb. So they know that they're at the heart of the economic regulation. They are too big to fail. Now, this is why the government has passed like Dodd-Frank and all this other stuff, because at the time, it was very critical to bail them out, because like we have incurred a huge economic cost. Now that everything has passed and everything's kind of stabilized, we can probably start taking out these bad eggs one at a time. Like anyone who doesn't play by the rules probably should be broken up.
I mean, look, there's no argument for me as to like, whether or not they need to be broken up. I just, I'm saying that we should be arguing for different reasons. And as far as the bailing out issue, I mean, yes, I mean, what you're talking about is a very pragmatic issue, but at the end of the day, is it right for the taxpayers to have to be burdened with the well, I'm still going to use the term bailing out the banks just because they were in risky behavior?
No, it's not only that. The choice isn't so much that the taxpayers get burdened with bailing out the banks. The taxpayers are either getting burdened with the cost of bailing out the banks or thousandfold the cost of bailing out the banks.
Right. No, I know what you're talking about. I know that you're describing like a pragmatic situation in terms of the monetary effect, of the issue, but it's still not going to stop people from being angered by the fact that, well, let's face it, we had to bail them out, right? Or for what?
Well, if people are actually educated enough, that the person that they should really be pissed at is Greenspan. The party that they should really be pissed at is Republicans, and the person that might even have a hand in this is Clinton. Like,
yeah, of course.
It's like that is really the true focus. It's kind of like you telling some guy that, hey, you know what, the Fort Knox is not going to be guarded, for next year or so, and then we're not even going to bother to check the gold levels. And some guy goes in and takes all the gold. I'm like, yeah, I mean that logically makes sense. Or some guy say, hey, I'm just going to leave $1 billion lying around and you just have at it. Well, some guy might just spend $1 billion that you gave him access to. You go, oh man, I expected you not to do that because I might get pissed. I'm like, well, but you told me, it's okay. Like literally, we told the banks, hey, make shitty loans. It's okay. Make loans to people with no credit. Make loans for people with bad credit. It's okay. And then they're like, okay, I guess we don't have to make good loans anymore. And that's exactly what they did. If anything, they were regulated, and for the longest period of time, no problems. And suddenly they got deregulated, and they made all these shitty loans. And then now we're re-regulating them. And if by the new regulation they can't handle it, then yeah, they should be broken up. But that being said, I think monopolies and oligopolies occur as an effect of economies of scale. Naturally has a place in the society as long as they can. Basically, economies of scale allow them to reduce the cost, and they allow them to reduce the price. And as long as they're competitive, and they're constantly trying to reduce the price, they're actually good for the economy. Because then, basically, they keep using their bargaining power and bulk buying power to keep the prices low, allowing people to benefit from the services at a cost much lower than normally would have incurred.
So how do you propose? How do you propose that we should break up the banks? I mean, should we bring it back to the Legal Act days and just banks operating on a per se basis?
I would say that I would make a rule in governance where banks that can play by the rule are allowed to buy out banks that can't play by the rules. I think that could be a very interesting start. So like, I don't know of a bank right now that's actually capable of doing that. But back before Bank of America, before they acquired Merrill Lynch and Countrywide Financial, they were actually the most profitable bank there was. And then basically all these banks started reporting losses, and then the government bailed them out. And Bank of America was like, "Hey, that's free money. Why aren't we getting some of that? You know, why wouldn't we want free money right now?" So they basically bought all these like toxic companies to drive their balance sheet into the negative so that they could get bailout money too. From their perspective, they're like, "Hey, you know what? I'm being paid to buy my competitor, expand my business, and it's for free. Why wouldn't I do that?" And that's exactly what they did as the policy. But had it been any other case, Bank of America would not have bought Merrill Lynch, they would not have bought Countrywide Financial, and they would be in a position to benefit from such policies right now,
I
buying out
don't think
Chase,
that's the
buying out
case.
all these other companies.
That's not the case because with the Glass-Steagall was repealed because Bank of America was one of the banks that had actually pushed for it so that they could actually expand into other states without having to do the setup that they had before, which was because before Glass-Steagall, the bank could only operate within the state. And so basically, if it had another Bank of America in another state, well, that means that it would have to go by that state's rules, and then administrative fees would, it would basically, it's higher than what it was. It was higher than what it is now because you had to operate on a per state basis, right? So you had to register a new corporation in every state. Now, on top of that, they purchased Merrill Lynch because Glass-Steagall was repealed, and one of the things with Glass-Steagall was that was it consumer banking and was it, investor banking and like trades and all that stuff. Those two sectors of banking were not to be merged, but then it was because that banks like Bank of America and all these other people wanted to make profits. They pushed for the repeal of Glass-Steagall, and then that's when Bank of America bought out Merrill Lynch.
Well, I think they might have wanted to expand across different sectors before. And then they were probably gonna consider like doing something on their own, just in general. But then they're like, "Hey, you know what? We could just buy them out." At the very least, it's safe to say that before the purchase of Merrill Lynch and Countrywide Financial, Bank of America was extremely solid performer in the market.
All right.
Like if you examine the negative, the net loss they incurred, is all from litigation issues with Merrill Lynch and Countrywide Financials. Like if you took those factors out, they have no issues with performance.
Um, yeah, I guess. I don't know. I mean, it doesn't seem to stop them from trying to screw over their customers, but that's a story for another
That,
day, I
that's
suppose.
that's the assumption that corporations will try to profit maximize, right? It's really the government that's trying to get them like corporations will often optimize for their own profit margins, and it depends. The question is whether or not government is the duty of the government to ensure that there's the maximization of social good provided in the system it has.
So um, you're saying that the government pushed Bank of America to hike fees on their own customers to meet the government regulations?
No, it's we're not. All right, so basically, almost all, like there's a lot of economic models you could examine, where like if the firm profit maximizes, it comes at a cost of social benefits, and if they drive their cost to zero, like where the profit is zero roughly, then that society obtains a maximum social good, which is the reason why we want to promote competition, which is like that's why we have the antitrust busting and so on. Is roughly the school of thought behind that is just to maximize social good because government is for the people, so it should watch out for the people's interests at most. But sometimes, like certain corporations, which are now quote unquote people, are more people than regular people. So Now, should the government be watching out for the majority, like concentrated people's interests, or just individual people's interests? You know, some bullshit like that. But it is a question of governance that always needs to be answered. And you know, through different parties, different politicians, different elected officials, you can definitely see that there is that type of thing being at play.
All right. Well, let's go to the next section. So, Bernie Sanders went out to the picket lines with Verizon workers who went on strike, calling the company evil for not supporting workers' rights. This prompted Lowell McAdams, CEO of Verizon, to respond to Bernie Sanders' criticisms. Lowell said that no other company invests heavily in the country's infrastructure as theirs has. So,
Country's infrastructure?
did I cut out again?
No, no. I'm just saying country's infrastructure.
Yeah.
I don't know. It does it belong to the country or Verizon?
It belongs to Verizon, but we, the people, benefit from it. So it's a gray area.
Yeah. So does Google consider himself greatly investing in the country's infrastructures?
They would say yes.
Yeah. I'm just saying. I don't know. So would they be willing to reduce their profit margins to benefit the country? Is that why they're doing it? I don't know. I don't think so. I feel like his answer is kind of full of crap.
Yeah, yeah. I mean, to a certain extent. So, oh well. So that's our view. Now, for the front runner on the Republican ticket, Donald Trump. Oh, are you freezing on me again? Dang it.
You got trumped.
I got trumped. There we go. Yeah, Donald Trump. So if he wins, yeah, that guy.
Yep.
So if he wins these red states right here, or even if he wins these red states, it's actually quite possible he may become the next president.
And that's when we have to move.
You know, we've been saying about that since Bush came into power, right? So, I mean,
I haven't said it for Bush per se. I don't think
so you would have stayed in
I
America.
wasn't paying that much
under
attention
Bush.
to that, like politics at that time. Now I'm dramatically paying attention.
Yeah,
I mean,
don't know.
technically during Bush, he didn't impact the economy negatively. He just set in motion everything that would fuck the economy completely over once he left. Pretty much
You mean like?
everything.
Yeah, no, I mean like, but to say that he doesn't have his hand in it, I mean, come on.
No, I'm not saying. I'm saying during his time, he didn't necessarily like. It's kind of like causing an avalanche, you know. At the very top of the mountain, it doesn't seem that big of a deal. The people at the bottom feels it, you know.
Right, of course.
I think I'm pretty much saying he caused the avalanche, but yeah, people that don't take into account the before and after effects would not be able to associate the two together. They're like, we had such a surplus, you know, when Bush was in power. Clinton left that, and then we had such a deficit when Obama came into power. The point was he came into it. The deficit was already there.
Right.
He just keeps increasing the national debt. It's been climbing forever. This is not news, people.
Yeah, but I mean, I think most people are taking issue with the rate that it's been climbing ever since Obama came into power. Although, admittedly, he, after having risen it for so long, it has been reduced. And I think it's back down to Bush era levels, I should say. So,
yeah, I mean, in essence, is that we had to spend our way out of the GDP hole that Bush left for us. You
right.
know, so like there was no way to fix to basically stabilize the economy. We can basically do what Greece does, let it fall into oblivion, and then
Woohoo.
basically allow our women to prostitute themselves for sandwiches. or we cannot fall into that state and pay a little extra more, like per month, like per year. And that's the route that our elected leaders decide to go with, which is roughly my preferred route on it. Like it's just the power of the United States currency is our stability. Like, why does no one ever always complains about national debt, but no one ever wonders, hey, why can't our debt keep growing up? Have you ever loaned money to a person and then they're like, hey, I'm not gonna pay you back tomorrow or the next week or the next year or the next 10 years from now? You're like, okay, here's another $1 million. And I'm gonna just keep doing that for the next 100, 200 years. Like, what allows you that confidence that you'll be paid back and so on? It's that stability that we portray. And the minute we start losing that, I think that's when the United States start really, really losing its power. That's a true way to really hurt the United States, is to hit us where our wallet is.
Yeah, that's true. So, um, here's the thing. Although he's been complaining that sorry, I'm cutting out again. So, now, despite the fact that he may actually win, or the possibility that he may win, he has been complaining that the Republican nomination system is actually rigged. So is he worried that he won't get the nomination compared to, his past comments that were filled with such bravado? This makes him seem like he's taking the victim's route.
That doesn't sound like a winner to me.
Nope.
Sounds like a whiner. Add an H to that.
Yeah, the past Trump would have made his rivals pay for his candidacy. But
Pretty
hey,
much, dude. Pay for all his advertising campaigns, pay for all his
exactly.
whatever. Same way he's gonna make Mexico pay for our wall. And then everyone else pay for his meal. He's
Right.
really good at that. He has winning headaches from just doing all that winning.
Winning. All right. Well, let's move along. Um, the World Economic Forum has a good graphic showing all the world's major exports by country. Now, if you notice, America and China both export electronics, which explains the rivalry between the two. But also, there are some areas where America still has some niche areas that are keeping it on top. So while China is a major exporter of electronic goods, and so is the US is a major exporter of the parts to the manufacturing machines and electronics that make those goods. So,
That's good. Although I wonder how long could that happen for? I mean, really, is it that hard to just reverse engineer the component and just build it?
they've been trying. But like, even with things like big pens, the ballpoint pens,
Yeah.
China still has to import them from Europe because they admit that they don't have the machinery to make fine precision spheres for the ballpoint pens.
That is very weird. They can make a
Well,
microchip. They can make a ball bearing, but they can't make a damn ballpoint pen.
no, the bearing for the pen itself.
Yeah,
Like,
I'm just saying they work on smaller things. They work on bigger things. Why can't they work on everything in between?
come on, man, it's China. What do you expect?
I'm just slightly shocked. I mean, they know how to copy all these other stuff. Why can't they copy that? That's shocking.
Yeah, whatever.
But that graph is very interesting, though, I think.
Yeah, you can check it out when you get a chance.
Yeah.
Anyways, the weekend review. Compared to the prior week, the Dow Jones overall jumped up 300 points, despite having fell a bit on Friday. Um, and of course, as expected, the Doha talks didn't go as expected today, and no one could come to an agreement. As such, international markets fell, which leads us to our next segue. So Australia is desperately well. They were desperately trying to climb back up into the black, and they made it there just briefly, and then like they kind of started coming back down, but it's still higher than like their low point in the day, but still in the red. In contrast, however, New Zealand has been maintaining a slight rise despite no deal being reached for halting oil production. So they don't seem to be phased at all, which is interesting. Japan, however, was not as lucky. But this is more than just Doha. Japan is still suffering from last Thursday's earthquakes.
Yep, and my anime is definitely suffering from that as well. So sad.
Yeah, so sad compared to the people who suffered a 7.0
It doesn't matter.
earthquake.
Anime is more important than their lives.
You and your hentai.
Huh? No, no. Don't bother with that stuff.
Yeah, because you got someone else over there, you know.
Huh? Sure, sure, sure.
Anyways, so on top of that, Japan's yen has strengthened, meaning their exports are weakening and commodities in general are falling as well. So things aren't looking too good for Japan, actually. Um, Now, Korea was also affected by the Japan's earthquake and the oil news as well. So they were, I mean, they kind of climbed back up from their low opening, but the fact that they opened that low was pretty dramatic. So, um, with all this, the Shanghai Stock Exchange went down as well, but this is also continuing last Friday's trend of China's stocks falling as a lower than expected GDP estimate for the year was released. Taiwan also opened lower. And just the same, Hong Kong was not spared from the wrath. So,
Those oil
uh,
talks.
yeah.
Global impact.
Well, there really isn't much for the playbook, but let me go ahead and go through the mandatory disclaimer. Again, just a reminder, none of the following should be misconstrued as financial or investment advice. This is merely provided for documentation only. And like that is the only thing I have in play right now. Although with all the news about no agreement with oil, I might try to put buy a put on the S&P 500 for tomorrow if I wake up in time. That is. So
Yeah, I mean, I would watch it for a little bit, and then once you make a good amount, put a limit stop on it under, let's say I don't know if it's gonna go up to 5 or 10%, but then put a limit stop on the 5 to 10, and the minute it drops back down and hits it, that's great. And just keep shifting it up until it peaks down, or until it peaks your threshold tolerance to ensure that you lock in that gain if you do get one. And then, of course, set a loss for yourself. Just like in Vegas, just like gambling, there is a point where you basically need to know that you lost enough and then just call it a day. That's a very important rule because, in a way, the stock markets are much like gambling, except you get more information and, hopefully that yields you better odds, but do note that you are not in control of the market at all. Unless you are, then kudos to you.
yeah, well, what are your positions then?
Um, I've exited out of Bank America. I bought Bank America at like 13.50. It dipped down to 13, and then due to the news recently about the oil and Bank America's like statement of release, like the performance release, that it was like I don't know, it's slightly lower than what they Bank America projected, but apparently I don't know for whatever reason the market reacted positively to it.
Huh.
So it jumped to like 14.20, and then I exited at 14. That's where my limit stop was. Just because I feel like if it's really, really, really positive news, there's no real reason for it to dip down below 14. It was at like 14.20, and as like a 20-cent difference, like if it drops down that much, then chances are that this rally is not sustainable. And I'd rather walk out with some money than to be walking out with a negative at this point. And not only that, but it does reflect my opinion that, you know, the market right now is too much like gambling. So what happened is now I'm treating it almost like gambling, but not quite. Just better information, you know, as long as like a little more control on everything. I'm also betting. I'm doing a put, or I'm shorting basically Caesar right now. So I have enough invested in Caesar so that I think I might have shorted at 720 or so. So if it goes up to 770, then I will lose $100, and that's when I'm going to call it quits. But my projection is that the bankrupt news and proceedings might continue to go as the government has planned, which is against Caesar Entertainment and pretty much all the subsidiaries. Then the stock price should fall. And
Right.
if it doesn't, then I lose $100, you know, which is okay. I mean, I step into a casino, chances are I'm gonna lose that anyways. But if it does go bankrupt, then I'm looking at 3 grand. So I'm
Right.
risking 100 to possibly win 3 grand. I don't think it's a good bet for me.
Yeah. So one of the things I was looking at just now was Starbucks. The reason for that is that this coming Thursday, they should be releasing their earnings report. So I don't know if you want to do like a earnings play with Starbucks or whatever, but that's on you. So
Um, I'll think
full
about it.
disclosure, I do own direct stocks in Starbucks. So
Nice.
um, so let's take a look at what else is in the week ahead. Monday, the housing market index is coming out. Tuesday, you got the Red Book. Wednesday, you have existing home sales and petroleum status report. You got Thursday with jobless claims, house price index, consumer comfort index, and the natural gas report. And Friday's not really much that we're looking at. I mean, the PMI manufacturing index is going to be out. So internationally, there's really not a whole lot. I mean, you got the ECB lending survey that doesn't really affect us in the U.S. though, and Japan you have the tertiary index, but it's the tertiary index, so not much to concern yourselves with, unless you have any positions in those. And let's see, recommendations. Yeah, I got none for this week again.
Yeah,
So
same recommendation for me for last week. Very, very carefully. Practically treat it like gambling.
all right, so just a reminder, we may or may not have ownership of the positions in the stocks mentioned on the show. Don't base stocks based solely on what you hear from this podcast, and always do your own homework and research before investing in stocks. And please, if you want to, you can subscribe um, on YouTube and just type in CONGKERNDPATH, and we're right here. Subscribe right here, please. Or you can always subscribe to our RSS. Just go to our website, mny.congkrndpath.com, and click on the RSS button right here. All right, that's pretty much it. So let me take us offline.